Hey, welcome back everyone. I hope you're all doing fine and well today. So before we proceed into this video and today's session, I want us to quickly discuss the elephant in the room, which is the US government shutdown. As you can see right here, the US government data may be impacted by the shutdown. Tentative events are subjected to delay, revision, and cancellation. So what that simply means is that some of the US data, we might not get them this week. Don't forget today, in the coming week, we have on Tuesday, we don't really have any US data on Tuesday. We don't have any on Monday. We have the FOMC meeting minutes coming on Tuesday. On Wednesday. That is going to be getting released, but it's just the minute. All right, so that's more like reading a report on the previous meetings, okay, that the FOMC committee have held in the past couple of weeks or days, so to speak. All right, so that is also very important because it gives us an insight on what to expect from the FOMC, from the Fed, literally, in the coming week, okay, or during their next, policy rate decisions. Okay, it's going to give us the projection, the plan, the purpose, okay, and the updates and insights on the current economic instability, economic data, and economic situation. Okay, because we have instability, we have data, and we have situation. Everything's going on in the United States right now. All right, so that's just going to give us an insight. That's more like an insight, like an insider to what is going on in the committee. Literally, that's more like it. On Thursday, we have the unemployment claim, which is the data that is being released by the US government, okay, office. And you can see that has to be tentative because it is not sure if it's going to be cancelled, if it's going to be revised, or it's going to be delayed, which we know that it's probably going to be cancelled. All right, and on Friday, we're going to be getting the data that we ought to have gotten last week Friday, which is the average hourly earnings, the non-farm payroll, and the unemployment rate. We're going to be getting all of that come next week Friday. Now, they're also tentative because we are not sure if we're going to get those as well. So, what now caused the US government partial shutdown on October 1st, which is Wednesday? So, in a very simple term, what caused that was, it's very funny to say, but the Democrat, let me just say the Congress, which consists of both Democrats and Republicans, okay, the two major parties in the United States, they both cannot come to terms on how to spend the US taxpayers' money. Okay, they can't come to terms on the country to fund, the allies to support, the military funding, and few other things. Okay, the fiscal policies, stimulus checks, everything that Congress, the bills, everything that the Congress has to do that deals with money. Okay, that deals with fiscal policies. Okay, like budgets. Okay, so every single fiscal policy kind of like cover everything. Okay, we got budgeting, funding, bill passing, bills that involves money, that involves just monetary policy, or every other thing. Okay, it just encompasses everything. That's what Congress does, because the president can't just sign up and be like, we're going to do this, we're going to do this. That would turn the whole thing from democracy to communism. All right, but then since democracy, we have people that sit at the Congress that have to decide on who to fund, what to do, where to do. They also check the president, if the president is doing what he's supposed to do. Everything involved. Some of you even know about politics more than I do. So, that's just where we are right now. They could not come to terms. They could not figure out to spend money out. And there are over 120 Congress members. Over 120. And they still can't figure out how to can't decide on what to do. That is very, very interesting to even think about. All right, to even think about. Well, we're going to see how it goes next week, okay? And you can see the data, the economic data is actually very, it's very light. Aside the Reserve Bank of New Zealand official cash rate, and they plan to actually cut 25 basis points, which is one of the reasons why we are getting a very weak reading on MZD in total, okay? It's reading pretty bearish, all right? So that's one of it. Reserve Bank of Australia should also possibly be cutting rate as well. The Reserve Bank of Australia governor speech, we don't really have any Australian data aside of New Zealand. I think maybe next week we should be getting some data from Australia. And on Monday we have ECB President Lagarde's speech. This will actually be very interesting. I will listen because now Lagarde, she's going to give us an insight on what to do, okay, and where the European economy stand right now, the inflation, the labor data, and a few other things, so that we can better prepare ourselves for the next ECB meeting, okay, their main refinancing rate, how it's going to go. Are they planning to cut rate, or are they going to hike it, or are they going to leave it unchanged? All right, that would be very important. The same thing from England as well, okay. Governor Bailey will be having a speech, Bank of England governor. Okay, he's going to be having a speech as well. We have to listen to him. All right, the last time, Bank of England did not cut rate, despite the fact that the United States Fed cut rate by 25 basis points. We didn't get any rate cut from the Bank of England. So we have to watch where they stand right now. Although we have the data, okay, we sure do have data. Where is that again? Where is the UK economic heat map? Right there. This one is still yet to load up. All right. So the UK economic heat map, we have the data right here. We can see it for ourselves. But when you take a look at this, the stock market, okay, the UK stock impact is very, 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 very weak, okay, and you can see there's literally stagnation, okay, stagnancy in the GDP growth in the United Kingdom is at 0%. All right, manufacturing PMI no growth, okay, service PMI even reduced, okay, we have we have a contrast there. It is not robust, it's just contrasting. And then, so when it comes to the growth in the United Kingdom, there's literally no growth over there. Okay, little to no growth. Okay, in my opinion. And you can see the retail sales. Retail sales seems to be up a little bit. Okay, and that was September 19th. So that's still like we're yet to get the actual data for this month. Yeah, but I mean, it is more like the only thing that's still holding up pretty nicely because we can see that the people are the citizens, the United Kingdom citizens are still ready to consume. They're still spending money, there's still money in circulation, which is very fair. But when you look at the inflation, the CPI is still pretty high, although the PPI is pretty low, but CPI is still very, very high at 3.8%. Okay, sticky, no increment, no decrement, still pretty high regardless. Okay, however, the PPI looks quite decent. Okay, although it got increased in the last update, the last that we got in February 19th. Okay, that's a lot of time. That's like 6-7 months ago. That is a while ago. So some things will have changed. I'm very sure of that. But the next time we're going to be getting these, it's going to be very, very tricky. Okay, so we have to wait for that. But the CPI comes every month. So we got 3.8%. So that's fair. In the United Kingdom, excuse me. Okay, I mean, mind you. And unemployment rate, employment change, they're not looking very good either. Okay, unemployment at 4.7% average, very fair. Okay, although the employment change is very bad. Okay, like 7,000 people lost their job in the last data. That was the last labor data that was released in September 16th. That is not about enough. That is not fair at all. And you can see that we have more like neutral. Like everything is just neutral. Okay, little to no impact. There is no growth. Inflation is still pretty sticky, and labor data is not looking very good. All right, and we got pound at 50%. Okay, 50%. I don't even like this. Okay, I don't even like this at all. And you can see the likes of pound AUD, pound card seems to be ravaging to the upside because they're taking advantage of the weakness in card and Aussie. The same thing with pound. No, if you check pound NZD, I think that also came up a little bit. Okay, a little bit because of the weakness in all of these currencies. All right, but when you take a look at pound dollar, all right, pound CHF, you will see that pound dollar is ranging, okay, for over 3 months now. And pound CHF is all the way to the downside because Swiss is a very, very crazy currency, very strong, okay, generally strong because of the safe haven attribute that it has. All right. So when you take a look at it, you see that the United Kingdom is actually not doing very well. On an average, they're just like average. But when you take a look at the economy itself, the pound is on an average. The economy itself, which is the stock impact, is very, very not cool. 25%. That is weakness. Okay, that's a lot of weakness right there for a currency of that magnitude, which is the United Kingdom. Okay, Great Britain pound. That is a lot of weakness right there. All right. So that said, let's go back to the United States dollar. Okay, economic heat map. Then we're going to jump into DXY. Then we're going to wrap it up for today with the chart. All right. So where is the US economic heat map? Why is it not loading up? Good. So taking a look at this, you see a lot of blues, right? You can see what we have right here on the US economic heat map. Everything looks very decent. Okay. First off, we have the growth. All right. The growth is coming up from the GDP to the manufacturing PMI to retail sales. All right. It looks decent. Okay. Now, GDP rules. I wasn't even expecting 3.8% GDP, the one that was released on September 25th. Okay, 25. I wasn't expecting that at all. Or I was expecting something like 3.0, like a shrink or a contrast to the GDP. But to most of the analysts surprised, which I was as well. Okay, we have 3.8%. It was a blow. Like, wow, this is interesting. And then we saw another expansion in the manufacturing PMI. Although we saw the service PMI contrasted a little bit, but all of this data, all of this four data. Okay, let's even focus on the 3 first. Okay, this 3 data actually looks very good. Okay, we saw an expansion in the manufacturing PMI, although it's at 49.1%, which is not 50 yet, but at least we see a traction to the upside from previous of 48.7 to the forecast of 49, and then we got an actual of 49.1. That's good. Okay, although the service PMI contrasted a little bit by 1.8, which is from 52. Okay, the market was forecasting 51.8, and we got 50. 50 is still very good because that's the PM minimum for service PMI. Okay, to show that the managers are doing very well. Okay, they are not losing money, although they might not be making so much, but they are not losing money in their purchasing power. All right, so that looks very, very good. And when you look at the retail state, it's actually reflecting the retail state because you can see that there's enough money. There's service, there's manufacturing, everything is robust, and the GDP is also growing up. Okay, meaning there is more from the local production, okay, or domestic production than what they actually import into the country. And I think we can also attach that to the September sales of iPhone 17. And a few other things. We have the AI, Open AI, 500 billion investment. We have the Microsoft. We have the AIs. We have the tech stocks actually doing very well. So we can kind of like just attach everything together and it kind of makes sense. All right, kind of makes sense in my own personal opinion. Although the inflation, okay, when you look at the inflation, it is not looking the best. All right, from the CPI to the PPI to the PCE, it is not looking the best right now because of why it is still very sticky. Okay, although another thing is the PPI slowed down, right? The PPI slowed down from 3.3%, we got 2.2%. I mean 2.6%. That was very good for the economy. Bad for the dollar, yes, but that is good for the economy. And I like that. I like what I see over there. It makes good sense. Although the PCE pretty flat, CPI pretty flat, quite sticky, but PPI is robusting. I mean, it's slowing down. That's very good. That will give insight. That will up the FOMC guys, the Fed, to do what? To cut rates. Okay, maybe they're going to cut harder. Maybe 50 basis points is the next cut, or maybe they're just going to probably continue with the slow paced cut of 25 basis points gradually. All right, but with the PPI reduction, that's very, very good for the US economy. Now, let's talk about the next one, which is the labor data. I mean, we're going to have to start from here all the way down here. This is where we are right now on the labor data. We have the wage at 3.7%, and it's more like nothing. There's no growth, no increment, no decrement. It's just mildly decent. Okay, we have an employment rate at 4.3%, which is still very good. And I mean, I won't say very good. It's fair for the US dollar, for the size of the economy that the United States is. 4.3% unemployment rate is very decent. Initial jobless claim showed that people actually start getting job. Okay, nobody's getting fired. All right. We're talking about the September 25th, which was upper week. Okay, that was the report. That was the filing. There were less people, like almost 17K people, 70,000 people did not go for their stimulus check like the usual. 70,000 people probably got employed. 70,000 people were able to retain their job. Like there was a reduction in the survey, okay, or in the filing of people that decided to. I mean, people that lost their job, people that got fired, people that got retired, or people that just left their job for no good reason. Okay, that was very good. What I'm trying to say is that nobody. I mean, there's a reduction in the number of people that went ahead to do it. Right? It's just like you have 10 people that used to come and beg for money. All right, like that, not beg for money. Excuse me. You have 17. You have like 10 people that used to come to you for help. Okay, can you support me with this? Can you support me with cash? And then the week after that, you only saw 6 people. Okay, you'll feel good, like wow, at least 3 people have gotten some job. They don't need my help anymore. Even though you love to do it, I don't know if you love it or not, but at least you like doing it. But 6 people coming, I mean, that's small money in your pocket. If you give them 1,000, that's like 4,000 in your pocket that you don't have to spend anymore. That's fair. So that's what we're talking about. So, and that means those people that didn't come this time around, they can support themselves, they can pay their bills themselves, which is good for you, good for them as well, because at least that will help you keep some money to yourself. And they can also like feel respected, they can feel elated, like yes, I can take care of my bills now. You understand what I'm saying now? So that it's a two-way thing and it makes absolute sense if you think about it the way I'm thinking about it. All right. So back to job opening, we've also got an increment as well, which is very good. All right. Although the ADP also got reduced and that was very, very weak. Okay. We're expecting ADP to be 52K. Okay. Just 2,000 reduction, but what we got was more like 84,000 reduction. Okay. That was very crazy. And non-farm payroll is that we've not gotten that since last week. I mean, since September 5th. So here we are. All right. Here we are. What to do? Okay. So if your plan is to, so this is what we have in general. Okay. I would say that in general, we have US dollar impact at 55.56%. I don't know where the 6 is coming from. Just maybe 55.5%. But that's fair. 55.56%. And we have the stock impact at 66.67%. So averagely, everything looks good. Okay. On the United States economy and on the currency itself. And that is why I said last week that I'm bullish, slightly bullish to neutral on the dollar. And when we get to the chart, I'm also going to share a couple of things with you as we move forward. All right. And when you take a look at this data at the bottom here, the assets, okay, the currency asset and the stock asset right here, you'll see that based on macro and economic score, you can see that S&P 500 is bullish, silver and gold is bearish, because when you have a very strong US economy, people tend to substitute gold for it. Like you sell their gold and hold more of dollar because you get interest rate, right? If you're holding dollar, you get interest rate. If you're holding gold, nobody's going to pay you interest rate for that. Okay, interest on that. You understand what I'm saying? So, with the increment, with the increase in with the boosting of the United States economy, I think it's making sense right now. And gold is kind of like dropping down. Their impact is kind of dropping down. It's kind of dropping. That's very fair. Yeah, my pen's not here. All right, so taking a look at the stock assets right here and the dollar assets right here, you can see due to the increment or the boost in the US economy, all right, we see the S&P 500 and US oil kind of read quite decent based on macro and economic score. Okay, you can see the S&P 500. Let's just say the stock and the commodities, okay, or the energies seems to be coming up gradually, because when you have a strong US economy, that's a signal that we have more investors coming to invest in the United States. Some of them might even go as well as selling some of their gold and silver assets just to hold some dollars. Okay, because when you're holding dollar, you get to be paid interest. All right, you're holding gold and silver, you're using it to peg against inflation most of the time, but you're not going to be getting any interest from it. Okay, more like you're just trying to hold a standard. Although they can increase in value gradually, slowly, but you don't get paid interest. But the dollar get increased in value over time, and also you get to get paid interest. All right. Now, when you come to the dollar asset, when it comes to the foreign exchange, okay, you see that Usdchf is quite bullish. All right, Usdjpy is also slightly bullish, score of 2, and we have pound dollar and euro dollar with score of 1 each, kind of like just flat, not super bullish, not super bearish either. All right, that kind of signal, like Usdchf trade I have running right now, if I can hold it long enough, I might end up closing a very good profit from it. Okay, and that's why I'm still holding, even though it's a pain in my bum, right? But I'm still holding it, okay, because of the dollar strength and the Swiss weakness. So before I go, I just want to take a look at the Swiss economic heat map, and then we're just going to round off. We're going to wrap everything up over here, and we'll jump straight to the chart moving forward. So Swiss, load up so we can finish the whole thing. Take a look at this. Oh my word! Look at Switzerland. Oh god, this is Swiss franc, guys. Oh god, 0%, 0%. Swiss is 0%, 0%. Oh god, this is awful. There's nothing to even talk about there. So I hope that USDCHF actually go up. If not because of the US government shutdown, I was expecting Swiss franc to dollar Swiss to have blew up the chart, like all those very great candlesticks that we just keep. But it shut down. When US government shut down, or investor will kind of like put back, I'm not going to do that. So they probably put some money inside Swiss. All right, which is more like what's going on right now. Swiss have now, let's be clear, Swiss have never been a very strong currency, ever. Okay, ever. They don't really have any data to back strength in the Swiss franc, ever. But because of the attributes of safe haven, okay, they have 0 interest rates. If you invest in Swiss franc, you're not going to get anything back. Okay, the economy is bad, the currency is awful, but because of that safe haven attribute, people tend to trust it more than a high volatile currency like the dollar that can, get interest, but sometimes it can get easily manipulated or awfully impacted. You understand what I'm saying? So that's more like the reason why Sweden is still holding the cat. Okay, still holding all the cat, in my personal opinion. But this is not looking very good. Okay, all of this is not good. I mean, look at the data itself. Unemployment rate at 2.8%. PPI at 1. It's just awful. Negative 1.8% PPI. CPI at 0.2. Retail sales, people are not buying anything over there. Look at retail sales, guys. Negative 0.2. They are the only country that have negative retail sales. It's just awful, and they have 0% interest rate. Okay, maybe they are going to even cut some more, and we have negative 0.25% interest rate. Who knows? I mean, it just keep getting bad. 0%. I might be wrong, but this is not looking very good to me. Okay, well, I don't even think I'm wrong on this one. But I hope that USDchf actually makes some sense moving forward, because I hope so. I'm playing too much today, I guess. All right, guys. So back to top setup. We have a lot to unpack on top setup today, and I don't really have the time for it. So we have pound card. I'm not interested, but I'll share 1 or 2 with you. USD card. I'm still holding my buyout trade. AUD card. I have a trade set up on it, but I'm not sure I'll be taking it. Pound NZD. I'm not interested. Nasdaq. Where it is right now, I cannot buy. Even though I have so much interest in Nasdaq, I cannot buy it right now. Okay, not possible. So I will just say I'll keep watching. Okay. Dow Jones, the same thing. I can't buy. SWITUI. USDchf is still very bullish. Okay, it's 4 of it. I have a buy trade on it. Let's see how that goes. Pound CHF, I'm not sure I won't buy this one. S&P 500 bullish. I mean, there's no way I can buy S&P 500 at all-time high. Doesn't make sense, right? Euro cards, I'm not interested. NZD card, I'm not interested. AUDCHF, I have a trade set up on it, but I'm not in that trade yet. Platinum, not interested. Pound Aussie, I have a buy trade on it. Okay. China 50, I have a buy trade on it. Bitcoin, I missed out on that one. Very painful. But my asset is actually doing very good. I have crypto assets. I trade it and I spot trade it as well. So I used to buy Bitcoin at every pullback. Okay, when it pulled back to 112, that time I bought some. When it pulled back to 107, like I think last week, I bought some. And I've been buying since it was at 95, 80 something K. So I've been buying Bitcoin since. So every pullback I go buy Bitcoin. All right. And I'll be closing by the end of the year. Then I will start again. Okay, every year, that's what I do. So right now, there's no buy opportunity on this one. So but I will share 1 or 2 on it still. That. Nikkei. Oh, Nikkei. I miss Nikkei. Oh, well, I don't want to remember Nikkei and Nasdaq because I got a very good buy opportunity on those 2, and then I closed it. And then I regret it till today. So let's go to that one. NZD, I'm not interested. NZD dollar, I'm not sure. I'm not sure on that one. I'm not even sure it's okay. It's part of my trade recommendation, so we're gonna check it together. CAD-JPY, it's part of my trade recommendation, but I'm not sure I'm gonna take this one. Bearish, I'm not sure. I'm not sure. I'm not sure, guys. I'm not sure. All right. So that's that on the economic front. We spent half of the time we usually spend here on the economic front, which is very normal. Okay, we need to spend so much time on this because we need to understand the economic data and how everything kind of works. All right. I would have wanted us to talk about sentiment, institution positioning, like COT data, just to see what the imagine that COT net position is not coming up, delay due to government shutdown. I mean, it's just part of the deal. So that's that. The US shutdown is actually affecting everybody. All right, so let's start with the DXY. So what do we have on DXY? Don't forget, earlier today we discussed the economic heat map, the US economic heat map. If you're just joining, probably you skip the video and you miss out on the first section of the economic heat map. All right, this one for you. I will still take you back. So you're lazy, you don't want to watch the economy. Yeah, easy again. So first of all, we discussed about the impact of this data before the US government shutdown. Okay, that happened on the 21st, on the 1st of October. Okay, so we got some data. All right, and based on all of those data, we can see that the US is actually doing very well. All right, we have the 55% USD impact based on all of this data. We're talking about the growth. Okay, let's actually do it like we should. So we're starting with the growth part of the economy, the growth part of the economy, the inflation part of the economy, and we have the labor part of the economy. Okay, as you can see right there, we have the growth looks very good. Okay, they're all looking very dicey, very interesting, very beautiful. Inflation is still pretty sticky. Okay, you can see most of it is just above neutral. Okay, only PPI seems to actually look very good. All right, or the CPI and the PCE looks like neutral, and the wage growth just started coming up gradually. Okay, although we have ADP that wasn't very good. Okay, but it was released October 1st, and then non-farm payroll was postponed, jobs was postponed, initial jobless claim was postponed, unemployment rate was postponed, and we know the reason why because we discussed the reason very early before when the video started. All right, so that is where we are right. That's where we are right now. And when you take a look at the stock impact, the stock market impact, you can see SPX is above neutral. All right, by 2 score. US oil is still pretty neutral, and then when you have a very good economy in the United States, gold and silver tends to do poorly. Okay, because both assets, I'm talking about the dollar and gold, they are more like pegged against each other. So when gold is doing very well, dollar seems to not do very well. And when dollar is doing very well, gold tends not to do very well. Okay, this doesn't happen all the time, but most of the time, that is the impact between both assets. Okay, now when we talk about the currency impact, okay, still about the macro data and the economic score, we have Usdchf doing very well. Don't forget, earlier we also discussed the Swiss economic impact, which is not very good at all. Okay, we have zero. The Swiss economic heat map is actually very zero. It's flat. Okay, even the Swiss stock is around 22%. Okay, the Swiss stock impact is around 22%. The Swiss franc itself is zero. All right, pretty flat. So just so we are clear on that one. So now taking a look at the dollar itself on the economic front, it looks very good, right? Now back to the chart right here. You will notice that from February 2025, okay, not even February. Let's take a look at it on a bigger view. Right from the top right here, which is around 13th of January 2025, we got this intense bearish momentum, and that's more like after the United States President Trump inauguration, which was done on the 20th. I guess is it 20 or 5th? I can't really remember, but it's between 20 and 5th. So this is like a few days before the inauguration, if it was done on the 20th. But we knew that Donald Trump actually won the election in, I think, November, right? So the impact started from early January, and we are still battling with all of that till now. So now focusing on the chart again, okay, focusing on the chart again, you can see we have some very technical concept that played out, which we can kind of put some meanings to. All right, first in June, we had this head and shoulder pattern, inverse head and shoulder pattern. We have shoulder, we have head, we have shoulder. This neckline was broken and the market went back up. And market went up, and because of some sticky inflation, bad labor market, Fed's holding on from cutting rate, we got this intense weakness resuming back to the dollar. Although this particular region right here at 9,700 was never broken. Okay, we got it right here, support. We got it here again as support. Okay, now again we are getting almost the same thing. We have a shoulder here. Okay, we have head here. Market went up, and now we are getting a fresh shoulder right here. Now we have this neckline at the top here. Are we gonna get the market break above it, pull back, and this time it's actually gonna rally to the upside, or we're just gonna get the neckline broken? You understand? Move to the upside right here, and then just drop down again. I mean, when you take a look at the economy looks on an average very good, but the technical look super weak still. So I am on the sideline right now, the dollar. Although if I'm gonna probably focus more on the economy, I would say that I'm betting on this particular move. Okay, at least this particular move. I'm not sure if it's gonna break above 100. Okay, 100 region at the top here, but at least I want to get this 100 getting retested by next week. If that failed to happen, I said next week by the end of the month, because this is everything that happened last week. Okay, on DXY, this is everything that happened last week. 1, 2, 3, 4, 5. This is it. So are we going to get this apple next week? It's not possible. Okay, almost impossible. Unless we're seeing some candles that looks like this. We're getting some candles that looks like this. Then we might eventually get it. Okay, like candles that move like this. 1, 2, 3, 4, maybe 5. All right, something like that would probably help, but I doubt it. Based on the government shutdown, the instability, the uncertainty, I'm not sure we're going to get all of that play out next week. So that is just that on that. Now on the other side, we still have a chance. There's still a chance that dollar can weak further to the downside. Okay, it can get weakened to the downside. Okay, it can further get weakened. All right, so we have to stay cautious right now, especially if you're trading the dollar pair. I am trading dollar pair. That's why I am staying very, very cautious. As a matter of fact, I've started reducing my lot sizes on all of my dollar pairs. Okay, I'm cutting my loss short. I'm slimming them down gradually. Okay, until I get a break above this neckline, pull back. Then I can now add more trades to my dollar pair. Anything outside of that, I will still hold the position I'm holding, but I will slim them down to a very minimal risk that I can afford to lose, because there is a possibility of that happening. All right, so that is just that on that. I just said, let me clear us on that aspect for now. Now, let's look at the trade I have running. I have USD long opportunity or long trade. My trailing stop is actually around here. All right, this is where my trailing stop is right now. All right, I put this one right here because it seems like the only thing that somehow kind of gauge this particular resistance. Now it was this as support, and we got the market rally harder to the upside. Now I knew that this particular supply zone would pose a threat to this particular trade, and I'm not oblivious to the fact that should I take my profit at the top here, or should I wait for it to come down a little bit and then rally back up to the upside and add to the trade? Okay, this is something I'm still battling. I'm still kind of like dealing with, but I have slimmed the trade down as well. Okay, right at the bottom here, I took around 0.08 lot size on my own personal account. Okay, there's some account that I trade that I use 0.5, 0.7. Okay, which I'm not at liberty to discuss or disclose, but this one is 0.08. But I think I've reduced it down to like 0.04 or 0.02 when I got the market to this region. All right, and I put my trailing stop right at the bottom here just to keep everything going. Okay, so that is that on USD. Now, if you want to buy USD because of what? Because on the top setup, on Edge Final top setup, you can still see that it's reading very bullish. It's called 14. Okay, and when you take a look at the Canadian dollar economic heat map, which I'll be showing you later when it finally loads up, all right, you will see that it's still very weak. Okay, it's still pretty much weak. So we just have to watch out right now. This is it right here. Okay, you can see the CAD economic heat map is reading 12.5, still very weak. Okay, you can see all of this bearish. This is a lot of bearishness. And you can even see the stock impact is also pretty bearish, lots of bearishness. So you just have to watch out right now. Okay, economically, this particular trade, okay, has a lot of potential of getting all the way to the top right here, of touching these regions. Okay, it has potential of riding to the upside because of the economy that we've seen, the data that has been released. Okay, now when it comes to the macro data, anything can change at any point in time. But right now, everything looks very good. So we just have to watch out, stay patient, stay cautious, and just trade the way we are all too. Literally. Okay, so I'm still very bullish. If we get a break above here, I will have to trade and target here and here and here, or the yearly resistance. I mean, it's still very much there. So watch out for this one. Usdchf is a problematic trade, just like GG last week, that ends up closing me out as break even. But when you take a look at dollar sweets, you will see that I'm still a little bit trapped inside this bearish channel, all right, a little bit. But again, I saw a very decent head and shoulder, inverse head and shoulder pattern right here. We have a shoulder, we have a head, we have a shoulder, we have this neckline broken. Now, can we get it rejected back to the upside? Okay, again, when you take a look at the Swiss economic heat map, it is not looking very good. This is a very good trade. Okay, I will take this trade 1,000,000 times over because economically it's good. Technically, it is not the best. Okay, because it is very bearish. All right, but I've seen this head and shoulder pattern so many times that sometimes people overthink it and I miss out on the trade. But overall, all right, it looks very good. This is the economic heat map I'm talking about. Look at the CHF economic heat map, 0, flat. Okay, flat. So that is that on that. Okay, but if you're going to join this trade next week, wait for this upper bound, okay, to get broken. Okay, the upper bound trend line of this particular channel, wait for it to get broken. Once it breaks to the upside, wait for the pullback to retest this region and then just take the trade to the upside. All right, that way there's enough room open for you to just trade. All right, so that is that on USDCHF. Pound Aussie, I told you last week that I'm going to be buying Pound Aussie at 2 particular regions, and that's exactly what I did. Okay, there is I saw the trade at 1, 2, 3, 4, 5. Yeah, I saw the trade around here last week, right? On Sunday, I said it's either I break above there, pull back, I will take a buy, one, or it comes back to this particular region, this particular demand zone, all right, or let's just call it demand, might be demand or support, whatever you want to call it. But I'll just say demand zone, okay, because there was a demand here, and this one didn't really break it, and then we got this particular one retesting it. So still being pretty demanded right there. Okay, so back to the upside, it goes. Okay, and it's also that's the reading. That's a positive reading on H-Finder. So that is another plus of the, as to why I took the trade. On Com 50 looks very good. It's already done, it's going faster than the speed of light. So I don't have anything against this one. I just want to hold it. All right. Aussie dollar is also pretty problematic, but I'm shorting this one. All right. And don't forget, last week I said I don't like the structure that I saw here. But when you take a look at this, we have this particular supply zone right at the top there. Okay. So I kind of like took this trade on the back of this particular supply zone on AUD USD. Okay, on the back of the supply zone and on the back of Aussie weakness. Okay, let me take a look at the Australian dollar heat map, economic heat map. Let's take a look at it together. You can see right here, Australian dollar economic heat map is still pretty weak. The currency is very weak. Although the economy looks strong when it comes to the stock impact, but technically on the currency impact itself is kind of weak. And I guess that is why it's slow. All right, it is pretty slow. So I would be cautious on this one. I would advise you to join because that is not looking like a very, very weak economy that you want to sell. 42.8% is very good. All right, compared to Swiss that we've seen 0% and CAD that we've seen 12%. Okay, those are poor. Those are poor economic stand, in my personal opinion. So Swiss yen is another one that I love, and I took the back. Okay, consider this is the crazy thing about Switzerland franc. Okay, it is just very terrible, right? It is just very terrible. When you take a look at how it impacts the strength, the kind of strength that Swiss wield in the market. It is strong. Technically, it is weak. Fundamentally, it is also very weak when it comes to the chart and the economy itself. The currency is weak. Based on the data, the macro data we've seen in the past couple of days or weeks, even months, the currency is weak, the stock is weak. But right on the chart right here, it is strong, right? It is just crazy because of the same even attribute. Okay, so when you're trading the currency pairs, this is why forex trading is one of the hardest things to do in the world. It's very awful, right? Look at this. It is beating Japanese yen hands down. Although it dropped drastically, and now I took a buy right here, and it seems to be doing very well right now. So far, so good. Looks very good. So I'm holding on to that one. There's no more opportunity on Swiss yen that I can give you. This is the best entry, and I think it's gone already. So just look for another thing. Euro dollar, I'm shorting euro dollar right now. You can see we have Lagarde coming to speed. Although ECB is still not, they still don't have a direction on how they plan to implement their next monetary policy. Okay, I'm not sure if they're going to cut rate or they're going to leave it unchanged. All right, but I'm not sure they're going to be cutting rate anymore because look at this right now. Okay, it's not looking very good. Okay, inflation is now messing up slowly. Okay, we have CPI at 2.2%, which is above target. Okay, and PPI is at negative 0.6%, fairly decent. Unemployment rate is going up. Employment change is not looking good again. You can see we have GDP also going down. Okay, the growth is going down. Inflation is sticky, and labor data is back. You can see the euro impact like 16.67%, and you can see the stock impact at 33.33%. So this is not good for the European Union as a currency. So they have to come and share one or two things with us moving forward. So that's why I'm shorting euro dollar. All right. If the dollar was able to make a very good move to the upside, we would have seen euro dollar actually fall all the way down like crazily. But because the dollar itself, the shutdown is impacting it very crazily. So we couldn't really get an actual move on this one. But let's just watch out. All right. If you want to take this trade, wait for the break below here. Okay, below this particular low. If I take this to 4 hour time frame, let's take a look at it on 4 hours. All right, you see what I'm trying to say right now. All right, if you want to take a short on Euro USD, do not try it while I did mine. Okay, just wait for the break below here. Okay, something like this, a break below here, a pullback. All right, then you can slowly short it. All right, because we have more like a wedge pattern right here. Okay, we have more like a wedge pattern right here. So this could happen. Market could break the downside, pull back, and then the market will drop further. So watch out on Euro USD. Okay, it looks very good for a short. All right, so watch out for it. Although if we break above here, again, if you have something like this, as the market is reducing, just bust out at the top, pull back, you start looking for buy opportunity. That means the DXY will have done what? Will have dropped drastically. So watch out on how you approach this one. Okay. Copper, like I said, copper looks very good. It's going to the upside. I love this one. All right, so it's no more recommended on H-Finder, so that's that. But I'm still holding on to that one, so that looks very good. So now moving on to Bitcoin, like trade recommendation. What do we have on BTC? Let's go back to the daily time frame. Okay, look at what happened Oh God. If I tell you I miss out on this one, you'll be like, bro, I miss out. I miss out on this. Like, look at the supplies, look at this demand zone. Like I just came there, tap it. I was expecting a little bit of a deeper drop to 108. All right. I was expecting 108 drop. And I ride it to the upside, but then I miss out on Bitcoin. So what is the next plan on Bitcoin? I want a pullback. Okay. I want a pullback. It has to happen. At least 50% pullback would be good enough for me and my entire household. Something like this. If I can get the market to come back to that region right there, okay, I wouldn't mind buying, you can say right there, all the way to the upside, something like that. That's my plan on Bitcoin. I still have like 130K in view, all right, and I'm very sure the majority of us also have that 130K in view. So if you also miss out on this particular rally, don't fret, don't cry about it, don't be angry, it's fine. It's part of the deal. Let's just wait for the pullback. Pullback to maybe 114K or 115K. Okay, let's say 115, 116, and 114. Okay, those are the area you want to buy from. All right, 114, 115, and 116. If you get those pullback, you can do what? You can buy BTC. Gbpy, I told you I'm not looking to short this one yet because, it is just not looking very decent enough for me. But as time goes on, if I'm going to sell this, all right, I would like for it to come down a little longer, pull back, and then I will sell. All right, I want this drop to be very decent. Okay, pull back, and then I'll sell. That is my plan on Gbpy. If not, I'm not gonna sell this one. Okay, I wouldn't mind missing out on it than selling from this particular region. It doesn't make sense to me. All right, so that's that on Gbpy. Ethereum, I have the same plan on Ethereum as well. Although Ethereum structure is not the best. I'm just gonna put that out there. Ethereum structure is not the best. Unlike the Bitcoin structure, okay, it's not the best. It came back to retest this particular resistance don't support anyways. Okay, we have a resistance right here, then use it as support, and the market just flew up. All right, I don't like this at all. But what can I expect? What can I do with this? Excuse me for all of my joins. What can I do? What is the plan? I can get a little drop. Okay, maybe I will buy Ethereum. All right, maybe I will buy Ethereum. This looks like a channel. All right, it looks like a channel right there. So if we can get that correction on Ethereum, I wouldn't mind buying Ethereum as well. Just even back to the middle right here, I will buy Ethereum to the upside. But if it wants to drop further to this particular support region, which was previously resistant, then I will buy from there also. So those two places, that's how I'll be buying Ethereum. So watch out. NZD dollar, NZD dollar, NZD. I want to short Kiwi dollar. All right, I would love to short Kiwi dollar, but watch out. All right, watch out. Where's my Fibonacci again? From here to here, it's not yet 50%. So let's watch out on NZD dollar. It looks good, but not ready yet. If I get pushed to this region, and then I watch out for a bearish candlestick, bearish engulfing candlestick, then I'll sell it. All right, I will sell NZD. But everything and all of this is extremely based on the DXY next week. Okay, if DXY continues to remain weak, I guess we're gonna probably look to buy NZD. All right, we're gonna look to buy NZD probably at the top here. Okay, but let's just watch out. Okay, next week has a lot of role to play in the market, and the government shutdown needs to probably get cut off or get postponed to further notice. All right, but we need the US government office. We need it to reopen as soon as possible so we can make plan on the dollar. The dollar pair. So NASDAQ, there's nothing on NASDAQ, guys. You all know my plan on NASDAQ. This is Nikkei, excuse me. Okay, nothing on Nikkei. It's weird. NASDAQ, anything on NASDAQ. You know the plan on NASDAQ. You know what I was expecting this region. The market almost tapping. Okay, almost tapping. But I couldn't take this one. I had to delete my pending order on this one because it was just pretty awful. All right, so NASDAQ is gone. US 30 is gone. It's gone as well. I was expecting back to this region. I wasn't even expecting here. Okay, I was expecting here and possibly here. So if it comes back here, I'll buy here, buy here, buy here, buy here, buy. These are buy regions on US 30. But is that going to happen? Genuinely, I don't know. Right? So we're going to have to watch out for that. Gold. This is silver, excuse me. Guys, silver is annoying. Silver is annoying. I took a buy here, I closed it here. I took another buy here, I closed it, I think around here. I took another buy here and I closed it somewhere around 44. Yeah, and I missed out on this one. I make good money from silver, but I'm also, I wish I had taken this. Trading, right? You must have a structure. If I don't have structure now, I can just keep buying. But you must have a structure. Without structure, you're going to be low money. You're going to blow out. Okay, so that's that. Gold. What do we have on gold? Gold looks good. All right, gold looks pretty bad good. But I don't know, guys. Right? Buy. We have a buy here. We have a buy here. Those are the three regions I wouldn't mind buying gold from. All right. Simple arithmetic. But is it going to happen? I'm not sure, right? I'm not sure. So we have to watch out again. So that's that on gold. Pound CHF. I told you about Pound CHF earlier. I wouldn't mind buying pound CHF. Why? Because of the support region that is retesting. Okay, it's retesting this particular. I have a friend that loves to trade pairs like this. So we have pound CHF back to this place, this support. We're gonna get it retested again, maybe. Okay. Now, mind you, there's something very sinister about pound CHF. Something very sinister, and it repeats itself more often than one. If you're able to see it, then good. But if you can't see it, I'm gonna tell you right now. So 1, 2, 3, go. Pound CHF, when it's dropping, it drops fast. Okay. When it's dropping, it drops faster than when it's going up. Okay. Look at this. Look at this. Look at this. Look at this. When it's dropping, it has a very precise way of dropping. That is why if you are trading pair like pound CHF, you want to be selling most of the time. Okay, because when you're buying, it will take forever. And the problem is you'll be packing up swap charges. Right. I mean, yes, swap charges is good if you're buying, because UK and Switzerland interest rate divergence is positive to negative. All right. We have 4.0% interest rate in the United Kingdom, and we have 0% interest rate in Switzerland. Okay. CHF, let's just say CHF or Swiss, SWZ or something. All right. So if you're buying, it is good for you, but you won't make good money. I mean, how much swap do you want to make? Right. Unless you're using like 30 lot sizes, then the swap can make sense. If you're not using like 10 lot size, 15 lot size, 20 lot size, or even 5 lot size, the swap will be like maybe $5 per week, or maybe $3. You're using 0.05, maybe 10 cents per week or so. It doesn't make sense. It's not reasonable. Okay. But if you're selling, which is very fast, you make good profit than when you're buying, because it's very fast. You quickly make your profit and bounce. Although you'll be paying negative swap, all right, but it's better. So now back to what I was trying to explain earlier. Okay, based on technical analysis, okay, if we can get this retested, you can buy. If you get pushed to the downside, break up, down, you can buy again. So let me make this make sense for people at the back, so they will know what I'm trying to say. So we have this particular high right here. Okay, you can wait for two things to happen if you want to buy pound CHF. Wait for this particular region to get tapping, break up, and all the way to the upside. So 2 ways: you can buy from here, and you can buy from here. So these are the two plans on pound CHF. If you're interested, pay close attention to it and take your pick. Pound card. Okay, so pound card is also very bullish. Okay, on Edgefinder, I think, is it very bullish or bullish? Yeah, very bullish. Score 15 or 16. I mean 14. Excuse me. You can see right here, pound card very bullish. Score 14. That's very good. So as for me and my household, this is a very bullish pair, though. Mind you, this is a very bullish pair. So I would love to buy, but I guess I couldn't buy the last time I analyzed this thing. Why? Because I was expecting the pair to come back down to this, this demand zone, but that didn't happen at all. So the best plan now is to break above here, decent break, pull back, and then you now find a way to buy all the way to the upside. So you might need to wait for like 3, 4, 5 days for this. All right. Well, I will keep you updated by next week. If this doesn't play out yet, even if it's not recommended on H1 again, I will keep you posted on pound card. All right. But if you want full access to all of this, you can join my Telegram channel or send a message to me, and I'll add it to my mentorship WhatsApp page. All right. Usdjpy, I'm not interested in that one, so that is that. Okay, but it looks like something that you might want to buy, but I'm not sure I want to take this. It's too weird. It's too weird. Pound dollar, that's the last thing I'll be discussing today. Pound USD, where are you? Pound dollar looks bullish to me, but right now I wouldn't mind it to come down to the support region, okay, and then look for a buy opportunity at the bottom here. Pound USD, everybody. Okay, simple arithmetic. It doesn't have to be complicated. It doesn't have to be weird. Just wait for the market to come back to the support region, all right here, and you look for buy opportunity from there. Why? Because we have a very good bullish momentum. Okay, so guys, I will see you in the next one. That's all I have for you today. Thank you very much for watching. Thank you for subscribing. Thank you for the messages. Thank you for the comments. I'll see you in the next one. Have a good day. Bye for now.